So welcome to today's class. We will be going through market levels. And just as I had promised earlier, is that we will now be more practical in the classes. But as I had requested you earlier, is to be patient with yourself and be patient with the process. Within the next 3 months, every theory will be through. And funny enough is like today, I never even traded the London session. So the reason why I was asking you to reschedule is because when I factored in the whole different schedules of different people, you find that especially now that I'm training people who are working, you find that there's a challenge with time and their timing, and it's sometimes conflicting with my classes. So, but I have aligned with your time. I will work with your time, no problem. So we'll
Okay,
proceed with
but
that.
I can move 1 hour later, but not before.
Yes, you can move. 1 hour later is not possible because it will now
Okay.
be within my trading time. What I was trying to do is to have more time trading because I've had to give up on my London session time because of the training. So that's what I had to sacrifice because I have to mark assignments, I have to answer questions. So now because I have the other batch of students, now that's where the conflict comes in, but it shouldn't worry you. I will align it as it is. So 6 to 7 Thailand time is fine with me. I have imprinted that. So we are not going to change it. Okay. So let's just meet 6 to 7. I will work with it. The only issue is we might be forced to move it later when the hour shifts to +1. When we have daylight savings in the US, we might be forced to move it 1 hour later. So it might go 7
Okay,
to
that
8,
means 7 to 8.
but
Okay.
not now, later on, when they move their time 1 hour ahead. Because when they move 1 hour ahead, it means I'll be going to the New York late.
Okay.
1 hour, by 1 hour. So that's why I wanted to just clarify on that. But anyway, that's okay. Before we go on to today's lesson, I want us to just go through your assignment, just quick, within around 5 minutes. Then we get into class because we are now going practical, and then I give you the assignment. It will be practical. You're going to go through all the levels. So let's start with the lessons from yesterday. Learned resolutions, made 3 months plan and expectation. So we have where was the most important lesson you learned from our recent session? Time is everything. Nothing comes fast. Yes, I'm glad you learned that because I wanted to be as honest as possible. How have your perceptions of forex trading changed after hearing about my experiences? Trading can either make you or destroy you. That is very true. We have been a number in the journey. Many have let go because number one, there's no freedom as people perceive. Yes, you can have freedom with a different style of trading, but when you're starting the first years, there's no freedom. It's a very time-consuming business, and you have to look for things to do during that time you're trading. You're going to go through with it. Which of the challenges I discussed with the most experiences? Buying signals and blowing accounts. Yes. This is something that you will come to find out on your own, or you learn from me firsthand. I had bought all types of signals and everything. And so what specific strategies and tips do you plan to implement in your trading routine? That's fine, even if you didn't put it there. You're just going to go on as you build in your plan as you learn more. What did you learn about handling emotions and psychological challenges in trading? Trading can make you depressed if you hold on a grudge that the market owes you. That all trade should be a winner. Yes. So just let go of any problem in the market, and you are still going to lose even when you're a good trader. And if you hold on to that notion that you have been good or have trained you in 3 months and now you are perfect in your trading, then you might find yourself still with this problem for a very long time. So if you start to get the work done, just treat every trade separately. If you take a trade, you lose, forget it. Learn from it, move on. Don't associate that trade with the next trade you're going to take. How do you plan to manage fear and maintain discipline in your trading journey? Pray, learn more, and have faith in God. Will do his part. Be ready that trading is either a win or lose. Yes, not every day is a trading day. That's true. Commitments to improvement. What specific resolutions are you making to improve your trading practices? Follow my daily routine. Yes, we'll keep on amending it day by day. Be disciplined at the trading. Yes, that will happen when we create a trading plan and a trading system where you'll be following it. Maintain risk management. That is number one key. It doesn't make sense to most, but recently a study was done even in these funded accounts. People get funded and within the first day, they just blow their account, not because they're not good traders, just because the devil of risk management just came in them and they forgot to manage their risk and they bleed the account within one trade or at one fundamental. So that is happening. So how will you ensure that you stick to this resolution? Prayers, of course, knowing and reminding myself why I started trading. And also journaling and back testing should be in your list to help you stick to them, because the more you see those things happening in journaling and back testing, the more. But in the course of time, we will do it. I think journaling and back testing will be, is it next week? Yes, next week we will go through journaling and backtesting as a lesson. I will show you my backtesting tools, how I do it, and journaling tools. Then we have daily routine adjustments. Are there any changes you plan to make to daily routine better align your trading goals? Yes, we'll keep on aligning it. How will these changes help you become more disciplined and consistent? In case I can't meet my daily routine, I will adjust it so I have to be comfortable and it is not straining me too much. Yes. So this is one thing I've kept on doing. Even when I was asking you today, I was trying to realign it to the best of the best, because now I have people who I have to commit to on a daily basis. What new risk management strategies will you adopt based on what you learned? The floating profit will not is not my money till the trade is closed. Yes. Cut losses short by accepting that a certain trade did not go as I analyzed. Very true and very correct. How will you monitor and evaluate the effectiveness of your strategies? By making sure that I journal all my trades. Yes, this is one thing that you're going to struggle with. And I will tell you something, even before I train you how to journal, you are going to struggle journaling. You're going to be very bored to journal. You're not going to journal the first few months, even if I tell you to journal. You'll be telling me you journal. It is something that has happened with my students. So I will tell you so that you don't do it. You are going to struggle with journaling. It is easier said than done, because it's writing down your feelings, writing down your emotions, why you took a trade, and so on and so forth. Then you have part 3 to 6 months, plan and expectation. Short-term goals. What are your specific goals for the next 3 months in a trading journey? Understand trading. That is good. Mastering trading. Mastering is a process. So that depends on how much time you're going to give it on class, in class, and out of class. Confidence in trading, that one will build over time. Growth in trading, this will happen over time. So in 3 months, yes, you're going to start having all the basics of what you need, but then you have to build the reflex. Building a reflex to react to the market or to react to what the market is telling you to do, then these are things that you're going to build in 3 months or more. I don't want to promise any, but this is a good start. What milestones do you have to achieve at the end of this period? Understand trading, that's okay. Mastering trading, confidence in trading, from blowing accounts to growing accounts. That's fine.
I didn't understand the two questions. I thought they sounded the same, so that's why I wrote same answers.
No, it's fine because it's just general. There's no deeper explanations. It was just to see, because it's the same milestones you have to achieve and specific goals.
Yeah.
So I don't want to really delve in them, because these are things that are going to be more practical than written down. But the action of writing them down is a good action, because now I know I can see the trajectory on which you are going. I can see that there's things that now I can work with to help you more. Okay. Then what are your specific goals for the next 6 months? I need to be version of myself, to be able to read the market and take trades with confidence. That is okay. This in 6 months will be possible. To prepare and protect my psychology, that is okay. To be able to pass funded accounts without strain, my trading, my main channel of income, quit my job because I have my income freedom.
I think I wanted to make it my main
income.
Make it my main.
Then it funds other businesses. Yes.
Yeah.
To become expert in trading, be able to trade more than one currency pair. This is fine. You might end up choosing to trade one for the rest of your career, which is okay, because that means that you are a market specialist. There are two types of traders, a market specialist and a trade specialist. A market specialist is somebody who takes a pair or like a commodity like gold, they study it, the way it moves, everything it does, and they can even trade the 15 seconds time frame in gold. Okay? That is a market specialist. Then we have a trade specialist. A trade specialist is somebody who comes up with a strategy from what they have learned, and then that strategy they apply it over a series of pairs and assets. So the strategies that I'm going to teach you here are applicable in all assets in the market and in all situations, in range-bound markets and in trending markets. So what I'm going to give you is a versatile approach of how you can trade many pairs or one pair. I'm not teaching you only one style of trading because I don't know what you'll end up loving. So I have to teach you one way that you can trade, but you can apply it different ways in the market. Okay? So this is okay. Yeah. So how do these goals build on your short-term objectives? Understanding trading, mastering trading, confidence in trading is the same thing. It is replicates and end up there. So that's okay. What specific action will you take to achieve to attend the classes as always? Yes, I will always show up. So, and I appreciate that you always show up. More research on trading, commitment, backtesting, making sure that I follow my daily routine. You see this backtesting, it is easier said than done too. I've seen traders don't know how to backtest. Many traders don't know how to backtest. They don't know when to backtest. Let me give you an example. You have 3 trading sessions in a day. You don't have to, or 4, because some people really trade the Asian session. I'm still going to mention the Asian session because you're going to make a decision if you're going to trade it yourself because you're in a different time zone and Asian session might work for you. Trading gold moves a lot and some JPY pairs. So you're going to look at it and you're going to make a decision if you'll do it. But in case you are not trading those 2 sessions and you are available, like when I was looking at your daily routine, the one that you created, there's a place where I saw you say you are analyzing the market, maybe after you are through with your classes, okay? So when I looked at it, I was like, you know, instead of analyzing the market at that period, I'm going to place backtesting during that period. So that when you interact with the market later, you know what you're looking for in the market. Ni kama tu venye athletes before they race. Let me ask, what do they normally do before they race?
Before the race, they
or football players before they start a match, what do?
They train.
They train, they warm up. Sindio? So backtesting is like warming up. I'm going to show you how to backtest long term, where you're just looking for market data, and where you're backtesting to be able to target tackle the market at a later session. For instance, you backtest during London as you are waiting for New York for you to kill your boredom and doesn't force you to press buttons and buy and sell and lose a lot, because London session has a lot of manipulative tendencies, and I will show you that as we move on. So make sure that I follow my daily routine and follow my trading plan. How will you track your progress? Yeah, journal. The consistency that I'm looking for if I'm analyzing the market become easy. Consistent wins. What do you expect to gain from the activities 3 to 6 months? Consistent wins. Come up with my own simple way of understanding the market. Yes. When I teach you everything, I will teach you how to create a model from what I will teach you. You see, I will teach you support and resistance, but I will not tell you to go and use support and resistance in the market. I'm going to show you today how these market levels are used, how you will use them, and as we move on, I will show you how not to use them. So guideline on the market works. So how will you handle any setbacks or challenges that arise during this period? Prayers accepting that trading is a two-way thing. Perfect. That is all right. I want to move on to the class. So we'll be having very short notes, more practicals, more examples till the class ends. So do you have any questions as we begin the class?
No, we go.
Okay. So let's proceed. So I know you have interacted with support and resistance, and maybe it might sound like I have, sorry. Maybe it might seem like it's something that you've already done, but the reason I go through them is because I don't know how you use support and resistance levels, but I want you to add on to what you use support and resistance for to what we are going to learn generally for. Because if I am telling you not to trade like a novice trader or like an online trader or a trader who doesn't know what they're doing in the market, then she will tell you, number one, what that learner is doing or what that trader is looking for in the market. And when they look for it in the market, how do you use it to be able to make money in the market, whether using it directly or indirectly, or having it on your charts just to see how price reacts to it. Now, there are so many ways. So let's go through support and resistance basic. So a support is a price level which where a downtrend can be expected to pause due to a concentration of demand. And a resistance is a price level where an uptrend can pause due to a concentration of selling interest. As the price moves up and down, support and resistance levels are formed. So how do you trade support and resistance levels? The way retail traders trade support and resistance is that they buy near support in an uptrend and sell near resistance in a downtrend. Another thing is that they enter a trade when the price breaks through a support and resistance. So when a resistance is broken or when a support is broken, that's when they enter. So these levels, number one, are not exact numbers, but zones. You use these lines to plot support resistance levels for clearer identification of these zones. So I want us to go to the chart, and I will use gold as my illustration asset, but we are going to use more because I've seen you have interest. As much as you love gold, you have interest in other assets, and it's better to be well versed with other assets than to be in just one asset. So let's go to this. So this
is Kevin, let me ask you, do other currency pair move? I don't know.
Yes, they do.
I've tried buying.
Yes.
And they don't move. Like I can stay there for 4 hours. This thing is it's just the same place. It's not moving.
What doesn't move? Pairs or gold?
The other pairs.
No, they do move. They do move. They do move, but it is up to you to time the market. You see, I'm not just here to teach you how to trade. I'm also teaching you how to time the market. Not all assets move at the same time. Okay? Number one, not all assets rely on the same fundamentals. And I told you that fundamentals are a catalyst for the market. All right? So this one, so you might find like a pair like Euro GBP moves a lot. Let me just give you an example before you go to, I might even use it for purposes. I haven't even looked at it for the past, I don't know how long, but it used to be one of my favorite pairs to trade a while back. Euro GBP. Euro GBP. BP. This is an asset. So I want you to see something about Euro GBP. Let me go to even a wonder. Okay. You see this pair? Does it seem to move?
Can you see how it's moving?
Can you see how clean it is? Can you see how it's creating a good trends? And by good trends, I mean from the start of the trend here to where the trend has ended here. Can you see how it is moving lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high? Then we have these equal lows there. Can you see that? So anyone who held, if you are a swing trader, this was one of the pairs that we used to swing for long, and it could make us money. Okay.
What about here?
Where?
Sorry, let me write again. Here, what did it do?
Where?
Is it not like break?
No, this is a consolidation. It did not break. This is a consolidation. You have to, and I will teach you. I will teach you impulses and corrections and impulses. Okay, we are going to learn all that. Not to worry. But today it's a different lesson. We might use this lesson, but let me go back to gold. But I just wanted to make it clear that these assets still move. It just depends on what you're looking for. If you go stick on Euro GBP, maybe it's not going to give you a lot of opportunities, but it's going to move when it moves. It runs. These are pairs that run, and they are not highly manipulated by the market. but they are not for scalping. They are more of day trading, swinging, and long position trading. Just a moment. There's some lag in the internet. Okay, so let's go through gold. So we talked about support and resistance lines. I don't know how you use them, but I just want us to go through different time frames and how they are plotted. So for instance, let me start with 12-month time frame in gold. And I will use Oanda server, not because I like Oanda server. I use Oanda server because it has most of price action. I don't know if this is true. It started on 1833, but you can see this is just some crazy price action. But anyway, we can see some more sense from 1970. So this is a gold chart. You can see we had a peak and a valley. We had a peak and a valley. We had a peak, and we are at its all-time highs. Gold was headed to 2,500. I remember I mentioned to you that gold, the next target, because in an uptrend, there's a time we were trading with you the first time before we started classes. I mentioned to you that gold will go to 2,500, the same as every other asset. So we have been on the right track on calling uptrend in gold and the other assets. So the first thing I do when you're drawing support and resistance lines, you change your chart from a bar chart to a line chart. This will help you get a very clear picture of where true resistance is. Why? Because the line chart in this case shows me the closing prices. This is the closing prices, closing prices, closing prices. And if I go to settings, I want to go to settings somewhere here because it's something maybe I will be mentioning these small nuggets as I teach you. So that we don't get into them when I remember, because sometimes it's not in the class, but I remembered. So when you want to have the structures to know what this line chart has, it shows that the price source here is closing price, but there are a list of prices that you might want your line chart to be. Open prices, if I put open prices, it's going to change. It's going to be a bit higher. If I put low prices, it's going to be lower, but the structure is the same. If I put in close prices, structure is the same, but it's going to shift where it is. So we normally use the closing prices. There's high, low, half. There's so much that you can put in here, but what you're going to focus on is the closing price of it. So this is it. If you want to change the lines and stuff, this is where you change it. Color, you can put it white and so on and so forth. But in this sense, we're going to use blue. Now, I put it first into a line chart, and you will take in your horizontal line. You can either find your horizontal line on the left here. You might find it. There are so many lines here. So there's this horizontal line. I'm going to take my horizontal line and I'm going to press on my laptop. You normally press either Control if you're using HP or Command if you're using Apple, or sometimes Control in Apple. So when you press on Control, I want you to look at the left bar, the left line on my chart. You're going to see this magnet is going to turn blue. So when I press Command on my Apple keyboard, this brings in this magnet. When I come near this peak, it's gonna act as a magnet to my horizontal line. So that is how I place precise resistance and support. So this is a resistance line. So let me apply the defaults on it. So I'll put in blue. So that's a resistance line. Why? You can see price went to that area and bounced off that area. And then what did we see the next time it did? It went to that area and broke right through and used it as support. Maybe never came back in the closure candle. But if you go to the candlestick, you can see this candlestick came and tapped the true resistance level here before bouncing off and going higher. Now, these are resistance. Which one is a support? So you're going to use this as support. So in this example, I'm still going to do the same. Press on my command key, and then I'm going to put in my support level. So this is a support level. This is a resistance level. So these levels, sometimes, the first time when price goes there, it came back. Before this price came lower, there was no resistance line to the left. So this is the first time it was created. Now, there are two ways support and resistance are mostly traded. They are traded either when price goes back to them and it comes lower. Most of the time price is doing this is when price wants to form a consolidation within two support and resistance levels. You'll find the high area and the lower side. So price will always sometimes be between support and resistance levels. And we will go to the lower time frame and get that. So in this sense, because we are in the yearly time frame, I normally have set mine to an yearly support and resistance. Now, do I differentiate resistance and support? I used to do that before, but right now I don't differentiate between them. I normally label them as yearly support and resistance. My color is yellow. Now, the colors I am using, I have used for a very long time. I cannot change them, so bear with me. But as we move on, you might choose to have different colors. But for now, allow me to use the colors which I prefer most. So for my yearly levels, including support and resistance, I use this one. Now, you might notice that when I put in my yearly SNR, it is very fast. I don't have to key in or type because I have pre-populated the lines, the data, and the way they are. How do I do this? So what I normally do, just to give you an information, I will not repeat. This is applicable for all the elements you see below my trading view. And in this trading view, how do I get this small tab? I don't know if you have it, but for you to put it in and for recording purposes, you normally come to your line at the assets, the object section to your left of your chart. And for instance, if you go to this pop out of this horizontal line, you will see trend line, ray line, and all sorts. On the far right of this pop-out menu, there's these star icons that are here, this star. When it is not highlighted or on this small tab, it is normally not highlighted in orange or yellow. But when you highlight them, yellow here, orange, or whichever color that you see here on your screen, they will align themselves here. So I take what I need from the arsenal of objects in all these tools. There are so many things, I don't use all these things. So what I normally use, I just put it in my quick pop-up, this one down here, and it is what I normally use. So I will put them there. So when for you to save this asset down here, either it's a ray line or a rectangular, you normally double click on it and you will come to these settings. So what you do is for myself, I will normally highlight text here. I will put yearly support and resistance line there. I'll have my label and all this. I want it bold, italic, whichever. Then I will put it, I want to see, where do I want to see it? I want to see it at the middle of that line on the right. But I can change it. If I change it to maybe at the front of the line or whatever, it's gonna change. Then I come to my style, I will put in my style. How do you save it? You come to the drop-down tool here, template, then you save as. You're going to have this area here. So what I normally do before I save as, I come to text, I copy this one, I highlight it, copy it, come down here, save as, then I will put it there, paste, yearly SNR, it's already there, then I save. So it is asking me to want to replace it. Yes, because it exists, I will replace it, but it's not going to give you this if you have not created one that looks like the same. So I will put yes. So then I will have them on my drop list here. So when I'm coming in to put my support and resistance levels, this is where I will choose them at, and I will show you. So I have my resistance there and my support. When I go to my candlestick chart, that is how the support and resistance looks. So we came into the support, we can see price closed there. So that's where all the prices are in that support. Then we can see we have this this resistance, sorry. Then we have this support here. Then price went higher. If I go back, we have another resistance here. So the same thing, take your horizontal line, place it above there, and label it your yearly support and resistance line. Yearly support and resistance line. So that is how I mark in my yearly support and resistance line. So what do I do? if I want to put in zones where I want us to go back to, now I will show you. Let's go back to our class. So we have the zones because they are normally not lines. These are not specific levels, and never look at them as levels. Why am I saying that? Is because when I put in this, how do I know these areas are important? I normally take in my rectangle, which you will find in your toolbox. Then I will come in this week that is here. And I normally press the icon, the command or control, press it down. You're going to have a magnet. I will place it there. Then I'm going to align it with my line there and this, and then I will set it out as my yearly SNR. So just a moment, template, yearly SNR zone. So this is how I draw my zones. Then I will come here. I will look at.
Question.
Yes.
So if I try to do the same in the template, but then
Yes.
what doesn't come?
Doesn't come how?
If I go to horizontal line, right?
Horizontal.
And then the template, yeah.
Yes.
For me, I use the line. And then you said I click it, right?
You said
to save it, right?
Yes, then you double click.
Yes. It comes like that. But when I want to put the text,
yes,
I have to do it myself, right? It's not like something saved already, like the yearly.
No, you have to do everything manually. Anything you see on this chart, I have created manually over time. So as I move, so now when we're in, now I will give you a trick. When we're in this subject and this topic, and we are going on, what you're going to do, save them. So when you're doing support and resistance and all these institutional levels, save them during your assignment, okay? Save them during your assignment.
So yes. How will I even know what I'm supposed to save? I only know support and resistance, yeah?
Yes. No, you're saving them every day. For instance, today I'm going to give you an assignment to draw for me support and resistance lines and zones. And yeah, three examples of which lines, zones, and screenshots. So in that sense, if you go to yearly, so what I have yearly resistance, I have 3-month resistance, I have monthly resistance, I have daily resistance, I have 4-hour resistance, and so on and so forth. They are saved, and I think you can see them here. Let me show you in this list, in my template. Here they are. They are quite a number. So I normally have this. These are the important ones that I have. My 1 hour SNR, 4 hour, I don't do anything below 1 hour or 15 minutes mostly, but I normally have them. So these are my SNRs, all of them, support and resistance. So when you see 1 hour SNR is 1 hour support and resistance. Because
what is the 4-3-2-1?
4-3-2-1 is time frames that are lower than the 5-minute time frame. So any resistance level, which is below the 5-minute, I don't have for 3 minutes. So if I go to 3 minutes and I see something, I use the 4-3-2-1. If I go to 1 minute, the 4-3-2-1. Okay?
Okay.
Yes. So I just wanted to explain to you what the purpose of all this. So this is how you normally write them. So you come to the candlestick and the same thing. So you don't have a big zone here. So as you can see, no big zone. So what I normally do is I will take this last candlestick here, this one, and I'll put in that range as the yearly support and the low of this candle here as my yearly SNR on that level. But now it is a resistance. This is a support zone. I like looking at them as zones, and I will show you why I look at them as zones. So that's an yearly support and resistance zone. So why are they zones and not lines? So normally I have this yearly SNR here, just so that when I'm in the lower time frames, I can see, because sometimes when you go to lower time frames, these words here disappear because of the timeline difference down here, because this can show you that this SNR is in 2026. So it might be far off when you go to lower time frame. So let's say I go to the monthly time frame, just as an example. I wanted to look at this SNR zone of the year. There was so much activity. You can see the support and resistance zone of the yearly. Monthly was bouncing off, broke lower, then came in there after taking out some lows down here. So you can clearly see that these SNR zones are very, very powerful. But when you go to monthly, I want to show you something. This is an SNR zone so I will go back to the line chart. And the SNR for the monthly normally change. Why? There are so many levels here. We have this level and this level. Now, the reason I don't put lines is because if you look at this level and this level, they are not aligned. So if I put a line here, it will not capture this. So in this example here, and in this consolidation, just as I was saying, I will take my horizontal line, come to my command, and I put in there, then I will double click it, and this is my monthly SNR. Now, if I have my monthly SNR, it guides me that this is the lowest level in this resistance, and I have some other levels down here. So what I do, I go to my candlestick chart, and then I can see that we have a range above this red line. So what I normally do to cover that area is I take my rectangle, come at this highest level there, then I will drag in, match it with this red line there, and now this becomes my monthly resistance and support zone there. I normally mark monthly with red. So that is how I mark them. So you can see you can differentiate between the yearly resistance zone, which are a few on the charts down here, but the monthly you have quite a number of resistance zone. You have that. If I go back to the line chart, the same thing. I take my resistance line, put it down here at this level here, there. Then I can mark it as my resistance, monthly resistance SNR there. Then I come back to my candlestick chart and I will pick the candle here and this low. This is my zone to the bottom line. So I take it there. So that is my monthly support zone. So as you can see now, we had a monthly support zone down here and a monthly resistance down here. And we can see that price consolidated between this resistance zone and this support zone, came once, then the market came back again here, came lower, did not break this zone, but broke the line. Then we continued running higher. And after we broke out this zone right here and took out all the highs, we used this zone as a support, then continued higher. So you can see the resistance line here turned into a support and we went higher. So the same thing, if we go back here, let's use this example here. You can clearly see that we have this consolidation down here. So support and resistance zones will help you see the long-term direction of the market when we break above. So you can see we have this line. So you put it in the line chart, because if you are to draw the resistance zone here, you're going to ask yourself, which area do I put the resistance zone? Go to the line chart. You can clearly see these tops are almost equal. Pick the lowest top here. So we pick this top there, put this as a monthly resistance zone, and then I will take in that zone from the low, I will take it to the high, then I go back to my candlestick chart, and I can mark in that area as a monthly resistance, which turned into a support later. We can see the market was ranging, tapping that resistance, going lower, coming at this resistance, going lower, then breaking above that resistance area. When we broke above that resistance area, this candlestick uses the support, went higher, and then it showed you that the market was moving higher before the next consolidation, because the market moves from consolidation to consolidation. So that is how you set up monthly support and resistance lines. And this is applicable in all time frames. For instance, I want us to move into this area here. I can see you marking. Let me. We didn't put SNR in the highest all time. Yes, I didn't put SNR at the highest all time because that area price is forming. Price is actually forming here. So this is not a resistance level, but an all-time high level. Okay? We will get into that. It's not a resistance. Why? Because price hasn't shown any significant push from this level. And considering it's an all-time high, there's nothing to the left to show us it's a resistance level. Why? Because price might just had made an impulsive move. See what happened. Price consolidated for a long time. And when price consolidates for a long time, it moves up for a long time. So what it does, it moves for a long time. So this is just a push-up, a retracement, then we have a continuation to the upside, in my opinion. So the
So you mean the price right now is lower than the all-time high, right? It's at 23.
Yes, all-time high is above here, but do you see, can you see this level here where we have significant move to the downside? Do we have a significant move to the downside?
No, we have a small one.
Yes, but now I just want to answer you something. In this level that you see here, if we go to lower time frames, and that's where I'm headed to, then you can draw your support and resistance level. Because you can only see this in the 1 month, but when you go to the daily and 4 hour and 1 hour, you will have support and resistance levels. So what I want to do, I want to widen this resistance level to cover that high there. Then I go to the lower time frame, 4 hour time frame, so that we see what price is doing around this area from the monthly. Then I show you that all these levels are just fractal. Now, just to now show you what is really happening, remember our red zone down here as our monthly zone. Now, if I zoom out this market here, you can clearly see now we have these levels in it. Now, what do I do if I want to have a clear picture of what the market is doing? I'm going to put in my line chart. Now I can clearly see we have this level, these levels, and so many multiple levels. What else do I see? I have an uptrend there and a downtrend there. But I have these levels here, which are very equal. So what I do, I mark in this level. And if I want a clear chart, maybe I can go to the daily, just because this is a lot of price action. Daily will remove for me the noise. Now I can see that there are not many trends, but a sideways movement. So gold currently shows me that we are in a consolidation. Now, what do? I mark in the same thing, resistance. This is a support here. I can see price broke through this, but this, as I told you, is a zone. So I just take the highest here of all these levels, and I also have another level here. It's also a resistance. You can even mark it here. You just want to have an idea of where you're going to have your zone. So if this is your daily SNR, that's a daily SNR zone, a line there. Then what do I have? I have this level here, another level. I can see it was had a touch here, another one here, and another one to the end. So this is another zone here. So I have another line around this level there, and which is a daily SNR. Then what do I have? Then I have the all-time high that you are asking, where we have that resistance. So I have that resistance there, daily SNR. So once I have those levels marked, I don't want to mark so many. I want to look at another level here. Yes, I can see there's a touch here, a touch here, a touch here. All these are touches that I see. So what I do, I mark in this level 2 as a median, because I had a touch there and all this. So you just look at an area which the market is bouncing off quite a number of times. This will help you be able to trade this consolidation, because you can see levels where market is reacting. What do you do next? Go to your candlestick chart and you mark in your zones. So from that low to where that level is, that is your daily SNR zone. Then from this line and above, so that is your range from that high to where the line is there. That is your daily support zone. Okay. Then what do you have? You have these small zones in here. So I have these zones. You mark in not very big zones. You just want where wicks are reacting more. You have that small zone there, and this wick to the upside there. That's another zone, daily SNR zone. And we have this small one here, where we can see it covering these weeks and this week. This is another SNR zone, from that high to where that line is there. So that is a daily SNR. So at least you now have your zones set in green. Green for me depicts a daily chart. So you can see that, so when price was moving in this level, you can see you had a higher high there, a higher low, we had a higher high, market pulled down, consolidated, came back up to that zone where price was, came lower, and all that. Can price go lower? Yes, it can, even if it's an uptrend, because we have some things here that the market, I'm going to explain to you what they are later, but today we're just looking at support and resistance zones. So when you go to 4 hours, you will see it amplified now to show you that price is forming consolidations within daily zones. Look at the zones that we created here. The zones we created here, you can see the daily zone and the daily zone. Price is in a 4-hour consolidation within a larger daily consolidation and within 2 zones of the daily. And even if you wanted to put as many support and resistance as possible, you can put them. But the lower the time frame you go, the less effective support and resistance is. In a daily time frame, these levels are important. In a weekly time frame, they are important, and price bounces off them, but not exactly at the resistance. I want you to see something. I want to bolden this example here. I want to make it a bit thicker, just for you to see. Let me put it as a line. So you can look at this line here. So anyone who wanted to trade this line here, you have this level set. Why? Because I will show you how we look for entry models in these levels. And then you go and build a case as to why price will go lower. Because as you go in the lower time frames, then there are patterns that are going to form along that line or along that zone that is going to give you an entry criteria to trade from this resistance zone to the next support zone. So these levels are used. You come in here, if you have them, and you see that price is giving you some models within those zones, and then you target the next zone down there. But you're going to build on this concept more and more and more. So do you have any questions in setting up support and resistance zones?
I want to be sure that you say that at a lower time frame, support and resistance usually don't work, right?
They start losing effectiveness and they are broken easily. So when they are broken, don't put so much weight in them. For instance, if you put in a 4-hour resistance zone, it will have a high probability of being manipulated than a higher time frame support and resistance zone. Now, remember this. Don't focus on the line. Okay, the line just guides you to understand, and that's where the bulk of the trick is. Don't put yourself in a position where you are expecting that line to hold. You are expecting something to happen that you do not yet know. But as we build on our strategy, then you will now know why did the market on the daily or the daily come here and reject this level and then come back to it and reject, and then we have fallen, so that you are able to know how to trade these lines. And they are important. And why you might hear somebody say support and resistance doesn't work or it works. It is up to traders to make a decision. It depends on how you use support and resistance. The way I use support and resistance is to give me a roadmap on areas where price taps. Now, let me give you an example of this example here. Now, if you are in a trade, let me go to 1 hour and I show you, because within that zone, we had a trend. I want you to see that these are daily zones, but as you can see, there are some trends within these zones. So if you could have bought at this support level or zone down here, because of some criteria you waited to see in the market, and the market trended higher high, went higher low, then went higher high. These are levels which should help you take profit in the market. Why? Because there's a possibility that this level might be broken, or there's a probability that price might get there, manipulate a bit, and then continue lower. So if you kept on holding from this level up, it means that when price got here and you never got enough time to exit the market, then the market came out and stopped you out, even after you were correct in the first place. All right? So you use support and resistance levels as areas of taking profits or making decisions if you're going to hold more or you're going to add more positions in those levels. So I will show you as we move on. Is that topic of support?
Let me ask you.
Yes, ask.
So right now the market is going up. So that means it doesn't have to reach at. Let me show you. This market doesn't have to reach here, right?
It doesn't have to reach there. Because remember, we are not trading support and resistance. I want you to detach what we are creating here and knowing support and resistance.
Okay.
I'm teaching you how to plot them and how to know how they are plotted, but they are not the basis of our trades. They will not form the basis of how we trade. They're not the ones which are going to tell us when to trade or not. They are just going to give us cautionary levels, which we should be more attentive when price approaches them. Are you getting me?
Yeah.
Yes. They are not levels where you execute. They are levels where you make decisions, but the decisions you make supersede the support and resistance level. Let me show you something. Can you see when price was dropping here? If somebody had this level, they would, and they were trading based on this level, then it means they would have either bought at this level and lost massively. Okay? So that is why support and resistance levels are good, just to see areas where market are reacting highly. But you don't make a decision using support and resistance levels anymore. Okay?
Okay.
Yes, because as you can see, we don't have a trend here. What we have is a consolidating market. All right. The market moved impulsively low, then it is bouncing off a daily resistance and a daily support. So this just gives you an example that now, if we are bouncing between a daily support level, let me mark in this and put it a bit thicker. If we are trading between these two resistance and support levels, then it means that the market is in a consolidation. So one thing might happen, or two things might happen. We might have price continuing trading between those resistance levels, giving us these things, or the market might break below this level and continue lower, checking out those lows, or the market might go above this level and continue higher. Those are just ideas that support and resistance might give you before you make decisions to trade the market. Okay? It just gives you a quick glance of what the market is doing, but you don't make decisions with them. Is that fine? Is that clear?
Yes, understood.
Okay. So I will now, this was the most important part of our lesson, but I will go to the trend lines. So I'm going to clear the chart and clear everything. Then I'm going to go to 4 hour. Then we're going to go through the notes, and then I'm come and give you examples.
So a question, can you draw a trend line and the support at the same time? Like on the same chart? Ama itakuwa ina make sense?
We are going to get into that, but I just want to show you how to plot them, and you're going to piece out all these things together. What I just need you to understand is this thing. You see, they're not the basis of our trades. That's why I'm not going to put in so much emphasis in them, okay? I'm just going to show you how they are in the chart, how we look at them, and then when I start now putting in all of these things together, you see how I use them. But I will give examples of using them. So let me just put in, just take back those lines that were there. Just a moment. I'll have them there just for purposes. Just a moment. So let's just have them there intact without removing them. Okay, so let's go to our trend lines. So basics of trend lines. So we have an uptrend line drawn along the bottom of support levels, valleys in an upward movement, and we have a downtrend line drawn along the top of resistance areas, peaks in a downtrend movement. So uptrend, we want to see higher highs and higher lows. Downtrends, we want to see lower highs and lower lows. Sideways trend, no clear uptrend, so you don't have a trend line, we have the support and resistance. So drawing trend lines, you have to connect either at least two major tops or bottoms, and so on and so forth. Then we have trend channels, which come from the trend lines. So these trend channels, you normally have as an uptrending line and a downtrending line in one zone, connecting and creating a channel. Okay, so you're
I have
creating.
a question.
Yes.
So a trend line is just one, right? Like
Yes.
example, like this, right? Let's say uptrend, right? But
Yes.
a channel is like this.
Yes. Yes.
Okay.
So it is two trend lines showing you what price is. These are things that you will see people using most of the time, and they work. Don't get me wrong. But they don't work because people are using them. It's because of the person who is using it. Okay? So different traders use these things differently. So let's go to the chart. So a trend line, I will give example of what this market is doing right now. So what we have here, and I will still, you'll hear me using this word, is a correction. The market is correcting or consolidating. So if we are to use a trend line, let me pick in this line here. I will connect at least these two lows. So you might choose to use lines, and I'll show you why you use lines. So you might choose to use lines. So you might take that level there, the same thing, press on command, then drag it. Is it supposed to be accurate? No. I told you, do not use these lines and levels as lines. Use them as zones. So this is an uptrending line. But if you want to use as zones, there's a tool that looks like a slanted rectangle where you come and you put it down here, something like that. Then you're going to put in a zone like that. Then you drag it somewhere like that, which will give you a zone that covers the wicks and the bodies of the market. So if I go to the line candlestick chart, you can see that this is covered, and you can make it a bit maybe slimmer. So you can make it a bit slimmer and smaller, and you can shift it in any possible way that you can. So let me show you something like that. So you can see that we have the trend line, which was just tapping the bodies of the candles, and it is broken. So sometimes traders will say that if a market taps the trend line, they buy at these trend lines. But I don't like looking at them that way. We use these trend lines and support and resistance to see liquidity, because many traders are trading them. So if a trader is waiting for this level to be supported, or maybe they are using wicks, so that's somebody who used the bodies. Let me use the wicks and show you what I mean. So somebody who used the wicks to put in that trend line. So he took that wick, then put in this other wick there. You can see there is no accurate way, because someone will say we have this trend line and market is bouncing off the trend line and not closing below it. And this area, that's why I say use them as zones. Why? So that you take into consideration if they are broken. Are they broken for continuation? Are we breaking that trend line for continuation to the downside? Or are we using that trend line as a bounce effect? But you can see that we bounced off this level, but it was not a trend line at first, because we only had this one level here. So when this one was forming, we didn't have a trend line. This trend line only formed because we had that one point and that point. So many traders are expecting to trade the third touch of the trend line, and this is where they go wrong. Does the third touch work sometimes? Yes. This price is in a consolidation, and you can see. And as we said, it doesn't have to get to the bottom of this level. But did this price bounce off here because there was a trend line here? No, it was not. But we have that trend line there. Now, trend lines create channels. Why? Because when you put another trend line at the top, then you will find a channel. But at this juncture, what we see here, we don't see a channel to the upside nor a channel to the downside. Why? Because the trend line that I see here, the next trend line to the downside, here is the trend line. So what are we forming? We are forming a certain pattern called a triangular pattern. I'm not going to delve into patterns because they are there, but we might touch into them, but we're not going to delve so much into them. So what you see there is that pattern, which traders use, a triangular pattern. But what we are studying today is trend lines. We have a downtrending line here and an uptrending line here. What is the market doing? The market is consolidating in a convergence form. It's converging. So the trend lines that we have here are converging in this example. What happens when the trend line is converging? You realize that the market will have an explosive move, either to the upside or to the downside. That's what you might expect to see. So you use trend lines not for you to trade there or trade here, but sometimes when a trend line converges with a support and resistance at that level, if you have nice confirmation entries, you would come here and look for a confirmation entry at that level to check if you can buy up to the upper trend line there. So that is what you might use them for. But as experienced traders, you use them to see where the liquidity is. And what do I mean by liquidity? I know that traders are expecting this one to hold and also expecting this one to hold. So how I use them is that I wait for the market. I can see that now here we have an area that I can target as a TP, and I have an area there I can target as a TP. Because I will look at the market as a convergence angle, but I will also look at the market on a sideways perspective, where I know that we're in a consolidation, and I know most strategies fail during consolidations. So when I'm using trend lines and support and resistance, I don't use them as a confluence because they are converging there. I just use them as guidelines and maps on the chart. Do I draw trend lines personally? Sometimes, but I do not rely on them to make any decision when trading. But they're just good to give you a map out of what type of a consolidating market you are in. Why do I say that? When the market is in an impulsive move like from here to here, it is impossible for you to do a trend line. It is normally very impossible for you. It does not even make sense. So for me, that is why I don't use trend lines as much, because I cannot draw them at an area like this where I want to catch this big move to the downside. And because I don't want to use them, I want to see when traders have put them in. For instance, I wanted to look for a channel to the upside. Here, we have this trend here. If you can see this trend here, this will give us a good upward channel. So this trend market was trending to the upside. Now, when it was trending to the upside, it was trending with fashions of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. So what could I have done? Just to make it simple, I just go to my line chart and I will take my trend line from this low here and I will connect it to that high there. And you can see we had this touch, and that touch. Now to see the channel, then you have another trend line on the bottom. So this is an uptrending channel. I will realign it well to touch this level here and that level. That is what you call an uptrending channel. So if I have my candlestick charts on, I can set price, started there, tapped there, came down to this level, went there, did not get to that level, came lower, went higher, came lower, went higher, did not come down. So there's not much effectiveness of trending channels. They'll just show you that the market is on an uptrend. That's just it. And when the market comes to a lower base of the channel, you buy in an uptrending channel. But they are just two trend lines together, giving you a sense of direction. But it is not that you will use them for any purposes of entry. I don't use them for entry. I am aware they are there. But as you can see, there's a place where they stop being effective. Why? Because there was somebody who was expecting that because we are the uptrend of the channel, we sell. What did it do? The market went higher. And when the market came lower and somebody was still expecting to buy from the channel here, they still lost massively. So I don't use channels to make decisions in the market, but I am aware they are there. But I let price action supersede support and resistance. I let price action supersede trend lines, and I let price action supersede the channels. So do I use them to enter? No. But do I use them as guides to know where there might be liquidity? Yes. Where price might accelerate to? Yes. Because when I put them, the same thing happened. So I will look at the market in this channel form, but I will also maintain my price action status to know that I am targeting that low. When the market starts running from this high, I want it to come and take out this low here because I know there are traders who are trying to buy at this support level. And not just that, when it comes to this level, I can see that the traders were trying to buy here because there is a trend line channel, the lower trend line channel. That means that price is gonna catapult to the downside to take out that low and take out that low. So that's when I'm gonna place in my entry here at the break of that trend line, revert it, go to a lower time frame and look. Let me give you an example. I want to go to a lower time frame and I will show you what was happening in that trend line somewhere here and this resistance level. So let's thicken that level to around 4
You
pips.
mentioned something like price action. What is that?
Price action is the study of this candlestick and what they are doing. There are things I will look for. For instance, let me go to 15-minute time frame, and I want us to use this as an example where price broke the trend channel up, came inside it, then came lower because I can see it was a resistance, a support level, and a trend line level. So I knew that down here, stop losses are filled because many traders will try to buy along the market here because of this move up. This was a very big move to the upside. So traders will see this move to the upside, and then when price comes to this channel low, they will try and buy the market and long it there. And when they try longing it there, then what do? I go to my lower time frame, and then I will get confirmation on what the market is doing there because I know many traders are going to put their stop losses somewhere there. So I go to a time frame like 15 minutes. Let me give you an example. And then I come into that level. Let me show you where I know many traders were doing, but I can see that the speed which the market was coming with from the 15-minute time frame was a what? Was it an uptrend or a downtrend? I want you to see this. Was it an
downtrend?
A downtrend. So what I see is that this level has been broken to the downside, and the market is now using it there. So this small move here normally gives traders some excitement that we caught the move from the bottom. Then immediately the market comes lower, moves higher. But the traders does not know that is what is happening. They think that they're going to buy at these levels because the market maybe has not tapped their stop loss. Then immediately you can see price catapulted to the downside. So when I'm talking about price action, I say price action will supersede anything that you put on the chart, be it a trend line, be it support and resistance zone, support and resistance line. You have to understand what reading price is and how not to use these levels. So you might be using these levels at the moment, but I want to ask you not to use them to make decisions in the market, but as confluences of areas which you might want to buy and sell because you know many traders are having it wrong. So you can clearly see that this market had moved quite substantially, but when it got to this level, it showed as if it will pause, but continued moving substantially away from it. And until you go to another daily zone, that's where price consolidated again. And then price went on consolidating inside this zone and having some small trends, then came up there, came down. You can see how price is just reacting. Came down here, then went above, is a support, resistance, came down, but a higher time frame resistance zone makes the sense. But another thing, don't put so many of them on the charts because what they do, they just cluster your chart and you will have so many zones and so many levels in the chart that making decisions would be hard. But you can use them sometimes to just map out and see and get a clear picture of what the market is doing, but don't use them to make decisions in the market. All right? You have any questions?
No, just that price action, but sijaelewa.
No, I will teach you. Price action is the study of price. So I'm going to show you how to read price against all these support and resistance, trend lines, and zones. What I wanted to know is, have you understood the resistance zones? Have you understood the support and resistance lines, the trend channels, and so on and so forth?
Yeah, so your advice is if I'm making support and resistance, maybe I should go up to maybe 4 hour or maybe 1 hour, right?
No, daily 4 hour minimum.
4 hour, okay.
Yes, 4 hour minimum, but you're not using them as the basis of your trade. I want you to understand that.
But I will be using them to know if I need to exit the market like maybe that
Yes.
trade.
You can use them for
Right.
levels of exiting the market or levels where a market might
Of
find some
entry.
type of a resistance, okay? Or also
What
as
about
entry, you can use them as entry
Okay.
levels, but they are not the basis of your trade. I want you to differentiate between what I'm saying. You
Yeah,
plot
yeah,
them
I
on the
get.
chart, but you're not using them as the basis of your trade. You're not using them
Yeah.
to make decisions in the market.
Yeah.
Okay? You're
Okay.
using them to map out what information you need from the market. Is it an area where price can resist? Is it an area that price can support? And you're waiting for one or two things. You're waiting for them to be faked out and the market comes back in and continues, or you're waiting for them to be broken and retested and the market continues on the direction which it was going to. The same as for the trend lines, okay?
Okay.
Yes, the other form of resistance and support are areas that I mentioned to you a while back, but I'm going to repeat for purposes of the assignment, are levels which I call the round number levels in the financial market. These are psychological levels like 1,000, for instance, 1,500, 2,000 in pairs like XAU USD. These levels often act as strong support or resistance due to their psychological impact on traders. Okay, so I'm going to show you exactly what I mean. So in this specific chart here, we are going to look at the range of where price has been, the highest price it has gone to where price has where price is going back. I want to look at something here. Look at this level here, high. It's written high. It is 2450.125. That is the highest price place that price has gone to. So what I normally like, how I normally like trading, I normally like putting in institutional level lines. On the same way I put them as a horizontal line, I come here and I will mark in 2,500. So I will double click there, come to coordinates here, and I will key in 2,500. Okay?
Why?
A template, because I want it to exactly go to 2,500. I don't want to start trying to guess where 2,400, ama kujaribu ku aim that trend line. Okay? And I call that an institutional an institutional midline number. Why do I call it a midline? I have three levels. I have a midline level, I have a round level, and my round level in this instance is 2,000. Anything with 3 zeros, especially in gold, like 2,000, 1,000, those are round levels. And we can see the market has moved 2,000 or somewhere below here. I want to show you something. So let's go 2,000. That's an institutional. So I key in 2,000. Template is additional round level. So I have my round level here. And if I move back, I can see it's an area where price used as support quite a number of times. Price went to the resistance, came lower, came here. It came on ranging around this number of 2,000 because institutionally and in the financial market, these levels are important because they are levels which are good to target. For instance, when the market is trending higher and we are trading in zones that people don't know, price is going to move from 2,000. The next level is around 2,250, then 2,750. Those are the ranges that I normally look at. So you can see 2,500, another zone that I'm going to mark in. Now, these levels now are 2,250, around that area, 250. I call this level institutional quarter levels. So that's the quarter. So this is how I subdivide them. So 2,250, then I will mark in 22,750. 2,250, right there. So let me show you. So between these levels, you can see that price has traded from 2,000, price went to 2,250. Use it as support. So that was a good range to trade. Then from 2,250, I'm anticipating for price to go to the next level, 2,500. So when you're trading these zones, these institutional zones, you have areas of target, which are independent from support and resistance level. I put them in the market to help me see the long-term direction. Even as I do my anticipation of price, I want to move. There's when I sent you some video a while ago telling you that NAS 100 will go to 20,000. I recorded it before it happened. It was a while back, I think a month or two back, and I said NAS 100 will go to 20,000. Why? I had put all these levels in the market. I want to go to NAS 100, and because the levels are a bit different. So in NAS 100, I used 20,000, 19,000, and so on and so forth. So when I come here, I had made a projection that price would go to 20,000 institutional round level, and you can see that is where price is short, just a little bit short. But I want you to understand this. Not all brokers have the same prices. I don't know if you have experienced this, but when you look at one broker, they are showing you that they got 20,000, and when you look at another broker, they didn't get to 20,000. That's why, as much as you have these levels keyed in on your charts, be very cautious of the zone level around them. You might mark in a small zone just to have a plus or minus 20, just to have that level. You have like maybe like 2050 above there, and you have 19, maybe almost 19,950 around somewhere like there. Why? Because you just are treating these areas as zones, which act as magnets for price, especially when you want to project where price is going to next. So the main levels that we have talked about today are support and resistance levels. I just want to have a recap and to tell you that I don't use them to make decisions in the market. I use them to support my buyers and also to caution me where we are in the market, so that I do not over expect the market to do something, and there are levels where the market might find resistance or support before they make the next decision on where they are going to draw to next. Another thing, they also help in targeting levels after you have made a decisions to enter a trade. So they also help in trade management, right? Do you have any questions in regards to what we have learned today?
No, I think I've really understood a lot.
So what we do is that as for the assignment for today, I'm going to just run you through the assignment. It will be practical now from now, moving on. So what you're going to do is that you're going to use, let me give you good. So this assignment is going to help you apply the concept learned in this lesson to the real market examples and enhance your understanding of support and resistance levels and trend lines. So and trend channels and round number levels, right?
Okay.
And I just want to see, I don't want you to have perfection. So don't strive for perfection, but if you can, that's fine. I just want to see if the concept you have understood how to place them, how to plot the lines and the zones, and how to have them on your chart, but they should not supersede what price action is giving you. So, excuse me, you can either use MetaTrader or TradingView. It is your choice, but the most recommended app is TradingView to illustrate the concept covered in lesson 7. So you will take screenshots of the charts, showing the required market examples, ensure that each screenshot clearly highlights the respective levels. So what do I mean by respect the levels? Even if you've seen me using these levels just a moment, and I have them preset, I just want you, as you are doing the assignment, just write for me that this area is a daily zone. Whether you're going to write them in like, you're going to key them in the same way I showed you text, you key it here, style, you put in the style which you want, or you can use text. You draw a zone, take the text box, come here and key in daily resistance zone, something like that, okay? Resistance, that's an example of what you do. Resistance zone, let me just complete that for zone. And then if you have a line, you put in daily support or resistance. When I take a quick glance, I just want to look at it and then tell you, then you can proceed to the next lesson. The other thing that I can see is, so you'll draw support and resistance lines or levels, they're the same thing. So I've given you an example here, which you can use, but it's not a must, okay? You can either go to Euro USD showing support at 1.2 or resistance at 1.250. You can use them as they are, but at least give me 3 examples of each. 3 examples of support and resistance levels, 3 examples of support and resistance zones, And you can do it in both line chart and in candlestick chart. But of course, for the zones, you show mostly on the candlestick chart after you have plotted them from the line chart. But however you show me, whether it is in line chart or in candlestick chart or in bar charts, I just want to see the concept is there. Then draw support and resistance zones, trend lines and levels. Trend line zones, you can use that tool that I have shown you in the market. You have this trend line here. You take this market here, this slanted rectangle from that low, maybe there to that area there. Then you drag it. Sorry. Let me show you from maybe an area there. This rectangular here, maybe from that level to that level there, and then maybe draw something like that, just to show me. I just want to see that you understand the concept. You don't have to be accurate, because I want you to cover the wicks and the bodies and show me the market was moving there, then it broke down and so on. You can use any time frame. The lower time frames you go to, the more you're going to get examples. So if you're using one asset to give me examples, when you go to lower time frames, you're going to find many examples. But I would recommend you to go to different assets like Euro USD, USD JPY, GBP USD, AUD USD, maybe the major pairs, and draw them there, because you're going to have many examples and it will be easier for you. If you stick on gold, it might give you some challenges. So round number levels, you go maybe to gold, draw for me 1800, 1900, 2000. You don't have to write them institutional midline levels or institutional round levels. You're going to learn that as we move on. I just want to see that you are aware of these institutional levels. Go to Euro USD, USD JPY. For instance, in Euro USD, the round level is 1.200, 1.2500, 1.300, and so on and so forth. Anything with 3 zeros or 500. Those are the institutional levels. Do you have any questions in regard to our assignment?
No.
Okay. So just to give you a preview of what we'll be moving on in the next classes, is that I was trying to see how I can compress as much information as possible. So that's what I've been doing in the weekend and now, since you said you want quite a number of work, and I've been trying to do that. So what I'm going to do, I'm going to type in for you and send you a document later on, maybe today or tomorrow, when I finish compiling, of exact dates of what we will be doing every single day from moving on. So that when you are coming to class, you will exactly know that on this date, I am moving on. Why? Because now we have a good routine which you can follow. You are comfortable with between 6 to 7 p.m. and I have also ensured that I'm comfortable between 6 to 7 p.m. so that we will just have our classes within that 1 hour. So it will be marathon. I teach you for 30 to 45 minutes. We have question period on 15 and 15 minutes or 5 minutes to do the question at the beginning of the class. So the next class we will do will be purely understanding price action. And by price action is the Japanese candlesticks and bar charts and line charts in depth. When we're talking about support and resistance, when I talk about price action, what do I mean by price action? So price action using a Japanese candlestick. So you're going to learn price action tomorrow. Okay, so we're not going to go back into any issues on psychology at the moment. Psychology will be at the far end. Right now it will be just technical, because we are going to learn some forms of candlestick patterns that people normally look at. I'm going to just give you examples, like 3 examples. I don't use candlestick patterns because candlestick patterns are late entries into the market. They will give you late entries in the market. For instance, I know you have gone through, maybe, let me ask just to judge how you know about price action. What do we have here? This gray candle. What do we call it in this aspect?
Engulfing, bearish?
Yes, bearish engulfing. But let me ask you, would you have wanted to enter the market at this level here or after this candlestick closed?
Up there.
So that means that if you are waiting for a confirmation of a bearish engulfing candle, it means you will have a very big stop loss. Isn't that true? You'll have entry there,
yeah,
and your stop loss above here, and your reward decreases. the reward that you're expecting decreases. And like how you'd have an entry around that area targeting the low, okay? So we are going to decipher the mids around them and how we use them. So we are going to have a deeper understanding of the price action and how I use candlesticks to make decisions in the market. I hope the class was productive. So I hope to see you tomorrow, okay?
Yeah.
So I'm sending you the assignment in the next 1 hour.
All right.
Thank you.
So I should also, like you said, I should also go and look at price action before we
No.
go to class.
You don't have to look for it. I'm just mentioning for you the next class or what you know what you're looking for. It was just an example of the list of things that I have installed because I had written the when I gave the course outline, it was 1 page and because I didn't want it to be cumbersome. But now what I have done, I have broken down every topic that we are going to study at every class. So I have put in topic 1, this class, topic 2, this class, topic 3, up to the last topic. Okay? So I want to put them in a profile where you're going to follow up what we are going to do. So that every day you're coming to class, you are aware of what you're going to do.
All right.
Yes.
Okay.
Any questions?
Not yet.
Okay, so in case you have any questions, put it in the email as you are returning the assignment. Then I'm going to answer within the first 15 minutes of the next class. Then once we are done, we continue with the class that we had purposed to study. All right. Then the last 15 minutes, then you can ask the questions in regards to that class.
Okay, sure.
Right. So thank you. Have a good one.
Thank you.
Okay.